Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Tuesday, the 1st of October. I'm Daniel Lam, your host for the podcast. I used to have a chess student who was very conservative and afraid to act. I told him that in situations which demand action and change of strategy, doing nothing or inaction is equivalent to making very bad moves. Now recently, we spoke about changes in regime, such as the Fed pivot, which demands adjustment in investment strategy. I would argue that the election of Mr. Ishiba as the new leader in the ruling LDP in Japan would demand action from investors. Now, this is because the markets were not really pricing in his victory, and he is a hawk in monetary policy. He appeals to the grassroots and has singled out controlling inflation as one of his key priorities. Now, this is very significant. We stated before that the BOJ has been erring on the side of caution over the last 12 months, carefully balancing the control of inflation versus maintaining growth. Now, any increase in hawkishness in its policies may dampen growth and lead to strength in the yen against the US dollar. Remember that back in early August this year, the sharp fall in dollar yen led to a very acute drop in risky assets. Now, the dollar yen is again at similar levels. Will we see further unwind in the carry trade, especially since the Fed has now started its rate cutting cycle? And will this lead to risk off again? So these are key questions in investors' minds right now. So therefore, the Nikkei 225 index fell by 4.8% yesterday, and the Topix index down by 3.5%. With the resurgence in Chinese equities due to larger than expected stimulus, the rotation of funds out of Japanese into Chinese equities is going to be another key driver at play. So it is critical for investors to act. For those that are invested in Japanese equities, they should act and rotate into Japanese banks, which is our equity opportunistic trade idea. We believe Japanese banks are likely to see improving net interest margins under a mildly higher interest rate environment. And this also explains why Topix outperformed Nikkei 225 index yesterday, because Topix is a bank-heavy index. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.